Hello traders, welcome back to my channel. Today we're trading on Pocket Option with a starting balance of $540 and I'll be using the compounding strategy. This strategy is very powerful because every profit we make will be added to the next trade, allowing the account to grow faster while still keeping risk under control. In this video, I won't just place trades randomly, I'll also break down the compounding strategy step by step, how I read the market direction, confirm entries using indicators like moving averages and MACD, and manage risk so that this $540 account can grow consistently. Make sure you watch until the end, because I'll explain every entry in detail so you can learn and apply this strategy yourself on Pocket Option. To apply this strategy, the very first step is to set up the indicators on your chart. 7-period moving average in green. This serves as your short-term trend line, capturing the most immediate price action. 20-period moving average in yellow. This reflects the medium-term trend direction, showing the market flow over recent candles. 60-period moving average in red. This represents the long-term trend and also acts as a dynamic support and resistance zone. MACD with default settings. This functions as your momentum tool and confirmation of the overall trend. By combining these four indicators, you gain a complete view of the market: short-term trend, medium-term flow, long-term structure, and momentum confirmation. When all of these align, it gives you much higher accuracy in your trades and more confidence in every decision you make. The way to apply this strategy is actually very simple, but don't underestimate it. The key is discipline and consistency. We focus on two major confirmations: the moving average crossovers and the MACD signals as our entry triggers. When a bullish crossover occurs on the moving averages, it's not just another signal. It means buyers are stepping in with strength, upward momentum is forming, and the probability for price to continue rising is much higher. That's when we take a buy position. On the other hand, when a bearish crossover forms, it tells us that sellers are in control. Price shows weakness, the trend shifts to the downside, and that becomes the ideal moment to enter a sell. But remember, we don't rely on crossovers alone. We must always pay attention to the red line, the 60-period moving average, which acts as a dynamic support and resistance. Every time price touches this line, it often reacts, bouncing or rejecting. And that reaction gives us additional confirmation for a precise entry. By combining crossover signals with the bounce reaction from the red line, this strategy becomes stronger, more accurate, and most importantly, repeatable with consistency. As your mentor, I want you to understand, trading is not about chasing every move in the market. It's about waiting for the best confluence of signals, then executing with discipline. That's how a simple method turns into a powerful compounding strategy. I'm taking a buy position because the MACD indicator is giving a strong bullish signal. The MACD main line has just crossed above the signal line, and at the same time the histogram is shifting from the negative area into the positive side. This shows that upward momentum is building, buyers are dominating the market, and the trend has a high probability of continuing upward. In addition, this crossover is happening below the zero line of the MACD, which often signals a trend reversal from bearish to bullish. This gives us further confirmation that the market is turning to the upside. With all of these alignments, my buy entry here is not just speculation, but based on a clear and valid technical signal. Let's see how the price reacts. Okay, profit for the first trade. Now we can open the market again and look for the next opportunity. I'm taking a sell position because the moving averages are showing a clear bearish signal. The faster MA has just crossed below the slower MA, indicating that the trend is shifting downward and bearish momentum is building. This crossover is a strong sign that sellers are taking control of the market, and selling pressure is increasing. In addition, the candlestick has also closed below the crossover area, giving us further confirmation that this downward move is valid and likely to continue. With this combination of signals, a sell entry at this moment is logical and has high profit potential. Let's see how the price reacts. Yes, exactly as expected, the price moved downward. Okay, profit. Now we can open the market again and look for the next opportunity. I'm taking a buy position because the MACD indicator is giving a clear bullish signal. The MACD main line has just crossed above the signal line, while the histogram is rising from the negative area into the positive side. This indicates that upward momentum is building and buyers are gaining control of the market. In addition, the growing histogram bars after the crossover confirm that buyer strength is solid. If this crossover happens below the MACD 0 line, it usually signals a trend reversal from bearish to bullish, making the upward potential even stronger. I also observed that the confirmation candle has closed above minor structure, which adds confidence that this entry is valid. With all of these confirmations aligned, my buy entry here is not random. It is based on a clear, measurable technical signal with high profit probability. Let's see how the price reacts. Yes, exactly as expected, the price pushed upward and we made a profit. Now we can open the market again and look for the next opportunity. I'm taking a buy position because I have two strong signals aligning, the moving averages and the MACD. First, the faster MA has just crossed above the slower MA, showing that the trend is shifting upward and buyers are starting to dominate. Second, at the same time, the MACD has formed a bullish crossover as well, with the main line crossing above the signal line and the histogram shifting from negative into positive territory. This combination strengthens the analysis that bullish momentum is not just temporary, but is actually building with conviction. When two different indicators confirm the same direction, the probability of success for the entry becomes much higher. Let's see how the price reacts. Okay, profit. Now we can open the market again and look for the next opportunity. I'm taking a sell position because the MACD indicator has just given a clear bearish signal. The MACD main line has crossed below the signal line, while the histogram is shifting from the positive area into the negative side. This indicates that downward momentum is building, and sellers are taking control of the market. In addition, this crossover happens above the MACD 0 line, which often signals that the previous bullish trend has weakened and is now reversing into a bearish trend. The deeper the histogram moves into the negative area after the crossover, the stronger the selling pressure becomes. This makes a sell entry at this point valid with high profit probability. Let's see how the price reacts. Okay, profit. Now we can open the market again and look for the next opportunity. I'm taking a buy position because the MACD indicator has just formed a bullish crossover. The MACD main line has crossed above the signal line, while the histogram is rising from the negative area into the positive side. This shows that bullish momentum is starting to build, buyers are taking control, and the probability of upward continuation is increasing. The signal is stronger because it comes with a confirmation candle closing above the crossover area. This adds confidence that the upward move is valid and likely to continue. With all these technical confirmations, my buy entry here is valid and carries high profit probability. Let's see how the price reacts. Okay, profit. Now we can open the market again and look for the next opportunity. I'm taking a sell position because the moving averages are showing a clear bearish signal. The faster MA has just crossed below the slower MA, indicating that the trend is turning downward. Sellers are gaining control, and the probability of a price decline is increasing. Additional confirmation is seen as the candlestick closes below the crossover area, proving that the selling pressure is strong and not just a temporary move. The wider the gap between the EMAs after the crossover, the stronger the continuation of the bearish trend. With all these signals aligned, this sell entry is valid and has high profit potential. Let's see how the price reacts. Okay, profit again. Now we can open the market again and look for the next opportunity. I'm taking a buy position because the price is currently reacting at the red line, which is the 60-period moving average acting as dynamic support. This line often serves as a natural bounce area, as many traders use it as a reference for the long-term trend. When price approaches the red line and rejects it upward, it indicates that buyers are still holding control and the main trend remains bullish. Additional confirmation comes from the candlestick reaction around the moving average 60, showing rejection and buying pressure from this level. This suggests a strong probability for price to continue upward, using the bounce off this dynamic support as a launching point. Let's see how the price reacts. Nice profit again. Now we can open the market again and look for the next opportunity. I'm taking a sell position because there are two strong confirmations from both the moving averages and the MACD. First, the faster MA has just crossed below the slower MA, which indicates that the trend is turning downward and sellers are gaining control of the market. Second, the MACD is also showing a bearish signal with a downward crossover, where the main line crosses below the signal line, and the histogram shifts from positive into negative territory. This combination strengthens the analysis that bearish momentum is not just temporary, but has the potential to develop into a larger downward trend. Let's see how the price reacts. Okay, profit. Now we can open the market again and look for the next opportunity. Okay, that's enough for today's trading session because the market conditions are getting worse and no longer giving us clear opportunities. Remember, as traders, it's not only about knowing when to enter, but also when to stop. If you want to learn more about how to apply this compounding strategy with discipline, in greater detail and step by step, you can join my VIP learning group. There, I'll guide you directly on how to grow a small account into a larger one using a structured approach. See you in the next session. Stay disciplined and always prioritize risk management.